Let us solve this question today. This is one of the agreement is taking place between Coca-Cola Limited and Zone Limited. Coca-Cola Limited is purchasing a cooler from Zone Limited on 1/1/1999. The cash price of this particular cooler is 4,47,000, but this Coca-Cola company want to buy this cooler under higher purchase basis, so that it want to pay this 4,47,000 in stages. So 1,20,000 rupees was paid on signing the agreement, so that this 1,20,000 is the down payment, and the balance amount also they are paying in 3 installments, so 1,20,000 each. So they have not mentioned here this 1,20,000 includes interest or not. So impliedly they are telling that is installment amount, that means it includes principal amount and interest. Even though they are not telling, we are going to check up in this 1,20,000 interest is included or not. So they are paying total 3 installments, 1,20,000, 1,20,000, 1,20,000 at the end of each year. Okay, so the interest rate included in the installment, it is 5% on the outstanding amount which is charged by Zone Limited per annum. Then Coca-Cola Limited depreciates this cooler 10% per annum on diminishing balance method or reducing balance method or written down value method. By using this information, now we need to prepare necessary ledger accounts in the books of Coca-Cola Limited. After reading this problem, first we should identify the required information to solve this problem. So what are that information required? So who is the higher vendor? That is Zone Limited. Who is the higher purchaser? Coca-Cola Limited. What is the date of agreement? 1/1/1999. What is the cash price of this particular cooler? That is 4,47,000. What is the down payment? 1,20,000. So what is the installment amount? 1,20,000. How many installments? 3 installments. What is the interest rate? It is 5% per annum. What is the depreciation rate? 10% per annum. What is the method? Diminishing balance method. So what we need to do? So we need to prepare necessary ledger accounts in the books of higher purchaser, that is Coca-Cola Limited. So first we should clear what we should do, then we can proceed. So first we need to identify in the installment amount is any interest is included or not. Okay, that's why we are going to compare two values. One is the cash price and the higher purchase price. So that here in higher purchase price they are going to pay down payment in first installment, second installment, third installment, then the total amount is going to come. But if you are going to purchase now itself by paying cash without higher purchase, you are going to pay only 4,47,000. That's why this comparison has been made. So these are the different stages. So as down payment in higher purchase price they paid 1,20,000. So if you are purchasing in cash system, so we are not going to pay any down payment. So no installment 0, second installment 0, third installment 0, total 4,47,000 we are going to pay. But in higher purchase price, as down payment 1,20,000, first installment 1,20,000, second installment 1,20,000, third installment so 1,20,000. Total amount paid in higher purchase price it is 4,80,000. In cash price we need to pay only 4,47,000. So that the excess amount paid, that is this 33,000, that is what the total extra amount paid, which we are going to call in the name interest. How we are going to calculate that? Higher purchase price minus cash price equals interest. Higher purchase price it is 4,80,000, this one, and this is cash price 4,47,000, this is this one. So 4,48,000 minus 4,80,000 minus 4,47,000, this extra amount what we paid, that is what the interest. So in each installment, how much installment has in each installment amount, how much interest has been included? Identifying that is the next step. So that is calculation of interest included in each installment. So we are going to start with the cash price. So cash price of the cooler it is 4,47,000, and we paid down payment in the year 1999. This is 1,20,000. After paying down payment, this is 3,27,000 is the opening outstanding amount for year 1. Okay, at the end of the year we need to pay interest at the rate of 5% on this outstanding amount 3,27,000. So 5% on 3,27,000 comes to 16,350. So how to calculate that you may be already knowing. That is 3,27,000 divided by how much? 100. So into 5, that comes to 16,350. Like this you need to calculate the interest by using the calculator. Now this is the total amount payable including these two, that is the 3,27,000 outstanding amount and interest. This comes to 3,43,350, and first installment we are paying, this is 1,20,000 rupees. This 1,20,000 now includes both amount, that is the principal amount and interest amount. So total 1,20,000, out of that 16,350 the interest and balance amount is the principal amount. Okay, so how we are going to calculate this? So total amount paid, it is 1,20,000. So out of 1,20,000, it is 16,350 is the interest. If you deduct this, you will get 1,03,650. So this is what the principal amount and this is what the interest amount. So including both, it is becoming 1,20,000. Okay, so we paid the first installment of 1,20,000, so that the balancing figure appears at the end of the year, it is 2,23,350. This we are going to consider as closing outstanding amount for year 1, and the same process continues for year 2, that the closing balance of year 1 becomes the opening outstanding amount for year 2, that is same amount 2,23,350. Again at the end of the year we need to pay the interest of 5% on this 2,23,350. So how previously we calculated, in the same manner you are going to calculate. So 3,23,350 divided by 100 into 5, you will get 11,168. So now the total amount payable to the hire vendor at the end of year 2, it is 2,34,580, but we are paying this amount in installment. That's why second installment amount paid, it is 1,20,000. Again this 1,20,000 includes two values, that one for principal amount, one for interest amount. Principal amount is nothing but the part of cash price. So out of 1,20,000, 11,168 is the interest. If you deduct that, the balancing figure what you are going to get, 1,08,833. That is what the cash paid for the asset, that we are going to call the name principal amount. So at the end of the year 2, total amount 3,34,518 we need to pay. We paid 1,20,000, and this is the outstanding amount closing balance for year 2. The same continue for year 3. Now for year 3, opening outstanding amount is 1,14,518. Okay, this is the third year. If we calculate exactly 5% on this outstanding amount, we will get some extra value. That's why what we need to do, so at the end of the installment period, calculation of interest at the last time, what you are going to do, you are going to take the opening outstanding amount and you are going to write the total amount payable, that is 1,20,000, that is the final installment amount. Okay, some 1,20,000 you deduct the opening outstanding amount, what you are going to get, 5,482. That should be considered as interest, and no actual calculation you are going to make at this particular stage. So what you are going to do, you are going to take the total installment paid, the last installment, this is 1,20,000. Out of that you are going to deduct the opening outstanding amount, that is 1,14,580. If you deduct that, the balancing figure you are going to get 5,482. That is to be considered as the interest. Okay, don't find the actual value, it may be more, it may be less. Okay, sometime it may going to match, sometime it may not going to match. If it is going to match, you are going to write the same value. If it is not matching with this final installment amount paid, 1,20,000, then what you do, at the calculation of interest at the final stage, that is at the last installment, you are going to find the balancing figure, not the actual calculation. Okay, so now we calculated the interest included in all the installments. Okay, that is 16,350 plus 11,168 plus 5,482. These are the interest included in installment number 1. installment number 2 and installment number 3. Next we are going to write this in a summary manner. Okay, the summary we are going to take. So here, so in higher purchase price we are paying 1,20,000 as down payment, and that is the part of cash price. On that down payment we should not calculate the interest. Then first installment amount also 1,20,000. Out of that 16,350 is the interest what we calculated in the table, and the balancing figure 1,03,650 is the cash price. In second installment the interest amount is 11,168 and the balance cash price is 1,08,832. In third installment it is 5,482 is the interest balancing figure what we calculated, and if you deduct 5482 from 1,20,000 you will get 1,14,518. this is the part of cash price. So at the end if you find the totals, now this is the higher purchase price, total amount we paid 4,80,000, the cash price it is 4,47,000, and this is the 33,000 interest, and this 33,000, so how much included in installment 1, installment 2, installment 3, that is what we calculated. After this summary, to prepare ledger accounts, one more information required, that is the depreciation charged on the asset. Here depreciation they are charging under diminishing balance method at 10%. Okay, what is diminishing balance method? In the beginning of the year, what is the opening balance available, on that you are going to calculate 10%. That should be considered as depreciation. In year 1, the total asset available with us for use it is 4,47,000. Even we paid only down payment and installment amount, little amount than 4,47,000, still total 4,47,000 of asset we are using in our business, so that at the time of calculation of depreciation we should consider the total cash price of that particular asset. So that is 4,47,000. On that 10% it is coming 44,700. So how to calculate that? So if you don't know, so you can see this. So to calculate this you are going to consider 4,47,000 divided by 100 into 10%. If you do this you will get 44,700. that is what the depreciation what we calculated here. Okay, like this you are going to calculate, and this from this 4,47,000 you are going to deduct this 44,700. the balancing figure you are going to get it is 4,02,300. so that is the closing balance for year 1. For year 1 closing balance of the asset is 4,02,300. For year 2 the same closing balance becomes the opening balance, that is 4,02,300. Again this is the opening balance for year 2. On that opening balance you need to calculate 10% depreciation, that comes to 40,230. Again you are going to deduct 40,230 from 4,02,300, and this is 3,62,070 is the closing balance for year 2. Now the closing balance of year 2 becomes the opening balance for year 3, that is 3,62,070. this is the opening balance available. On this opening balance again for year 3 you need to calculate 10% depreciation. So 10% on 3,62,070 it is 36,207. deduct 36,207 from this opening balance, you will get 3,25,863, and this is the closing balance for year 3. And now the same continues for year 4 opening balance 3,25,863, and this continues for all the years up to becoming this particular asset zero value. Okay, but here only 3 years we are going to do this, because only 3 years we need to prepare this ledger accounts. So now the information we got, so what is the interest included in the installment amounts? Okay, that is this one, every installment. And what is the depreciation we charged every year? So 44,700, 40,230 and 36,207. So with the help of this information we can prepare ledger accounts. In the problem they may ask us to prepare only journal entries or ledger accounts. In this problem they ask us to prepare only ledger accounts without passing journal entry. Now let us prepare the ledger accounts. So first we are going to prepare the asset account. You can open the asset account in the name itself. Here the asset is cooler, so we are preparing this in the books of Coca-Cola Limited, that is higher purchaser book, not in the higher vendor book. Okay, so higher purchaser is Coca-Cola Limited. In his books we are going to prepare this. First the asset what we are purchasing. So for the asset we paid first 1,20,000 rupees as down payment. Okay, this is happened on one day, on what date? On 1/1/1999 we paid down payment 1,20,000 rupees. So debit what comes in, asset is coming in, we debited, credit what goes out, cash account. In cash account we credited, but in this particular asset account we need to debit, so 1,20,000. At the end of the year, to the higher seller we paid 1,03,350 as the part of installment amount, that is part of cash price. So total asset it is available with us, it is 2,23,650. At the end of the year we are charging depreciation 44,700 that we previously calculated. So now the net value of the asset available with us is 1,78,950. So what points you should keep in mind at the time of preparation of this ledger account? So debit side you are going to write, so what is the amount you are paying only for the asset without interest. Here cash account 1,20,000 down payment, and that there is no interest. And at the end of the year we paid for the, in the name of installment 1,20,000, but out of 1,20,000 something is interest that you should deduct, and we should find out what is actually we paid for the asset, that is 1,03,650. And credit side you need to record the depreciation what we are charging according to the method, according to the percentage, it is 44,700. Then you should find the balancing figure. That balancing figure represents the closing balance, and that closing balance becomes the opening balance for the immediate next year. So how you are going to close this? You are going to find the total of that particular side which is showing more. Here debit side is more, 2,23,650. The same we are going to write here, 2,23,650. From that you are going to deduct 44,700. The balancing figure you will get 1,78,950. That is the closing balance, and that closing balance becomes the opening balance for the immediate next year, that is on 1/1/2000. Opening balance brought down 1,78,950. And again at the end of the year you are paying to Zone Limited installment amount of 1,20,000. But for the asset, how much you are paying after deducting interest, that only you need to consider in the asset account. So 1,08,832 that we already calculated. In the summary you are going to find this. And at the end of the year we charge depreciation 10% on the opening balance of the asset, that is 40,230. So now we are going to close this account. Find the total under debit side, because it is more, it is 2,87,782. Write the same under credit side, 2,87,782. From that you are going to deduct 40,230. So you will get the balancing figure, that is 2,47,552. That is the closing balance for year 2, that is 2000. Now this 2,47,552 becomes the opening balance for 1/1/2001. Opening balance brought down 2,47,552. Again in third installment, how much amount you are paying for this in the name of installment 1,20,000. Out of that you are paying for the asset only 1,14,518. So at the end of the year you are charging depreciation 36,207. So now we are going to close this for year 2001. Find the total of debit, that is 3,62,070. Write the same under credit, 3,62,070. Now out of 3,62,070 deduct this 36,207. You will get the balancing figure 3,25,863. And at the end of year 3 the closing balance becomes the opening balance for year 4. Okay, this process will continue. There is no payment of cash again, so we are going to charge depreciation every year up to it becoming 0. Okay, cooler account continues for the 4th year also, 5th year also, but here we are going to do up to this extent only, because in problem they ask us to calculate only for 3 years. Okay, so next account we are going to prepare, that is the higher vendor account. So who is providing this particular asset on credit basis, on higher purchase basis. So in this account, without passing journal entry, how to prepare ledger account? So under credit side, okay, what you are going to do? You are going to write the total installment amount paid. So installment amount consists of two values, one for the asset and one for the interest, that you are going to record in credit side. This this information is available in that total summary. Okay, what we already prepared, that you can see here. See one here you are going to find here. So 1,03,000 for cash price and 16,350 for first installment, that you are going to record under credit side here. Okay, this is the total amount payable 1,20,000, and this is happening on the end of the year, that is 31st/12/1999. On the same day we are going to pay the cash. This is the due entry, this is the total amount payable, and this is the amount paid. So for there, the first year account comes to an end in connection with higher account. It's not going to show any balance. Okay, we are going to record on the credit side what is the total amount payable in the name of installment. Installment consists of what is for cash price and what is for interest, the total amount payable, and what is the total amount paid, that is in the name of installment cash 1,20,000. The same continues for year 2, that is for 2000. At the end of the year, what is the total amount payable for the asset and what is to be payable interest on the outstanding amount, that is 11,168. Again, that is available here in this particular total summary. Yeah, these two items you are going to record under credit side. And the total amount payable, it is 1,20,000, and now at the end of the year we paid second installment to the higher vendor, that is 1,20,000. So this is the total amount payable and this is the total amount paid. There is account is going to end. The same happens for the third year, that is for 2001. Total installment paid is 1,20,000. Out of that 1,20,000, this is for the asset 1,14,518, and this is for the interest. This we need to record under credit side, that is 11,14,518 and 5482. Total 1,20,000 payable, and we paid at the end of the year 1,20,000. So in the 3 years, for the year 1999, 2000 and 2001, by paying 3 installments, 1,20,000, 1,20,000, 1,20,000, consists of what is the for asset and what is the interest, what is for the asset, what is for the interest, what is the asset and what is for the interest. So these accounts will come to an end. Okay, this is higher vendor account. Next, the 2 expenses what we incurred in connection with the asset in the name of depreciation and in the name of interest. Okay, that also we need to open and we need to close them. So here, without passing an entry, how to prepare this depreciation account. So open the account, write end of the date 31st/12/1999, because depreciation is charged always at the end of the date. The write the asset account here, and that on which asset you are charging depreciation, debit side the asset account, and how much you are charging depreciation, 44,700. So that you need to calculate here. Here already you calculated 44,700. The same you are going to record in this particular depreciation account under debit side 44,700, and at the end of the year you are going to transfer this particular expenses to the profit and loss account, because this is one of the expenses what you are incurring in your business. The same happens for second year, that is for 2000, 31st/12/2000. On that cooler account you are charging 40,230. So that you already done here 40,230. So that you are recorded under debit side, and same you are going to transfer the same day to the profit and loss account 40,230. In the third year, again how much you are charging, 36,207. How much you are transferring to profit and loss account, 36,207. Like this, depreciation account also will come to an end. Then last one more account, that is interest account. So how, to whom we are paying interest? We are paying interest which is included in the installment amount. This is the summary amount we can see here, 16,350, 11,168, 5482. So in this 1,20,000 it is included. Now this is the expenses. This we need to transfer to interest account, that we did here. So to whom we are paying this interest? To the Zone Limited on 31st/12/1999. So 16,350 interest we paid, one of the expenses we debited as nominal account. At the end of the year we transfer the same to the profit and loss account, 16,350. That's the end of first year. Then for year 2000, again Zone Limited we need to pay interest 11,168 and transfer to profit and loss account 11,168. In the year 3 also, for Zone Limited we need to pay 5,482 on 31st/12/2001, and the same day we transfer this expenses to profit and loss account 5,482. So that's the end of interest account. Individually we need to prepare for year 1, year 2, year 3 at the end of the accounting period. Interest account in the same manner, depreciation account in the same manner, higher vendor account, and in the same manner the asset account. So only one account which is going to show the balance, that is 36,000, that is 3,25,863, which is showing this account, this asset account. The asset account only is going to show the closing balance. Zone Limited, that is higher vendor, depreciation account and interest account, these 3 accounts are not going to show any balance normally. So this is what the value which is showing 3,25,863 should be matching with this particular one. So what is available at the end of the year 3, that is 3,25,863. Opening balance for 3,25,863. So this is asset accrual method. So even we are paying only some amount, that is installment 1,20,000 and 1,03,650, 2,23,650 total asset we received in the money value, but complete value, the whole asset has been used, but the ownership is transferred to us only to this extent. Out of that asset, 47,600 gone out of the business in the name of depreciation, and this is the closing balance, that is at the end of the year one, the asset value available with us is 1,78,950. This method of preparation of or maintaining the account, we are going to call the name accrual system. Okay, asset accrual method. In examination they are going to ask this method only. Okay, so this is the one of the easy problem, but how much you are going to practice, depending on that you are going to learn this. Okay, so what now you are going to do, so you write down the problem first. So how the video is going to run, in the same manner according to the explanation you are going to write down in your notes, so that you will get practice. Okay, if you have any doubt, you can WhatsApp to my number, or you can write in comment box also. Okay, so do this particular problem in your notes, right?